welcome back everyone. Time for our next keynote at FinTech Live, New York. This time we're talking about how to become hyper customer-centric in financial services. It's a big aim for everyone. Now let's welcome Ayca Tunc-Ruff, Vice President and Head of Financial Services for the DACH region at Genpact. How are you? Good to see you.
How are you?
Very, very good, thank you. It's all going very well. There are plenty of questions coming in, and when there's plenty of questions coming in, it makes my job even easier. And when we have keynotes like this, I will join you at the end to pick up at some questions at the end from our audience. But as they say, the virtual floor is yours.
Wonderful, thank you very much. I hope you can all see my screen. Let me start with a quick introduction. My name is Ayca, based out of Frankfurt, Germany. I'm heading Genpact's financial services business in Germany and the DACH region. So we are a global professional services firm providing digital operations, data, technology, and AI services across the globe. I bring in overall 15 years of work experience. I've always been at the intersection of financial services, technology, and operations. And I'm very, very passionate about customer services. I'm very passionate about customer centricity, independent of the industry and whether it's in a private B2C or corporate B2B environment. So that being said, customer experience is everything, and that's my very, very strong belief. And with digital challengers, fintechs, and neobanks constantly rewriting the digital engagement rulebook, customers are increasingly demanding banking experiences that are easy, seamless, and still personalized to their needs. So great customer experiences create great customer relationships, but many banks continue to undervalue the importance of customer experience. The result is obviously annoyed customers, it's lost revenue, it's low conversion rates, and it's a low NPS score. So let me give you an example. I was sitting in a board-level meeting with one of Germany's largest financial services organizations roughly 6 to 7 weeks ago. This was a business gathering bringing industry-leading CXOs, board members, and the technology leadership together. The meeting went on for 90 minutes, and probably for 80 minutes, all that I heard was risks and regulations. I didn't even once hear the word customer experience. Not even once a mention of the word CX, basically about the customer group that are the ones who are driving your top line and your growth. It was all about risks, all about regulations. Might also be that it was due to the demographics in the room, but this is a separate topic as such. Yeah. So this is a wonderful one-meeting example that many banks still continue to undervalue the importance of customer experience. Genpact is helping many financial services institutions across the globe today to crack the code on customer experience by creating an accurate, detailed view of the customer, building consistent and personalized journeys across all touch points, and providing frictionless journeys to conversion through the usage of data, technology, and AI, which is a core pillar of our service strategy. In a nutshell, we do help our customers build digital experiences that our customers love. Let me start with a few statistics. So the good news is 90% of the world's leading top 25 financial services firms want to become more customer-centric. 78% even have it as a properly defined target to improve on customer experience. Another very recent study found out that banks could expect to see a 27.5% growth rate by simply improving their customer experience scores by 10%. Can you imagine the impact this little adjustment can have on your top line? The growth rate comes from a combination of reduced churn and increased revenue from existing and happier customers that drive value back to the bottom line. The problem in many organizations is, though, that there is a very siloed nature of dealing with customer experience. And there is also one more inconvenient truth. And that inconvenient truth is that 75 to 85% of digital transformation programs fail. So let's assume you were to go in for a heart surgery and the doctor said you have a 75 to 85% failure likelihood. Or let's say you were to buy a new car knowing there was a 75 to 85% chance of a crash because of a production failure. Would you even think of going there? clearly we are doing something wrong in digital transformation, or the industry is doing something wrong in digital transformation with regards to customer experience, yet we are still willing to go through the motions, knowing that it's largely a waste of resources. And millions across the globe, billions of euros and dollars are being spent on a global scale on those initiatives. Yeah. So we've analyzed the reasons actually and combined it with multiple years of real market experience. And I just want to share a few reasons why this is happening. We obviously observe a very slow decision-making process in large corporates, and I always say hiding behind governance meetings mentality. We definitely see a lack of alignment to business outcomes. So most executives struggle to put digital transformation and customer experience into financial language, as well as the question on what is the business value versus the customer value. We see a lack of awareness within the organization. I mean, it's the year 2023, but still, humans by default fear what they don't understand. The majority of large financial services organizations' employees will reject new software, new tools, new applications and processes, even if it will improve their lives, unless they're slowly or consistently educated. We see or we observe some level of inability to translate all of this into executive language. So most executives are not technologists by nature, and the inability to translate those efforts into a compelling story that non-technologists can appreciate leads to a siloing of the digital transformation and the customer experiences team. So drop your IT vocabulary, start telling compelling user experience stories and financial stories instead. Yeah. So what I try to do in every customer meeting of mine, day in and day out, I try to work or use business language that covers the value we are delivering to our clients. I'm providing a service to you today as Genpact, but what does it mean to you? It means a reduction in your customer onboarding time by X hours. It means an efficiency gain on a specific process by 25%. It means I'm committing myself to an increased NPS score by X points. And finally, what we also observe is a lack of control over external vendors who are typically the ones supporting those initiatives. So the lack of agreed consequences for unmet expectations ensures that you will definitely pay delay costs for not holding your vendors accountable. And we at Genpact, we're super proud to work in a fixed price and value share outcome-based pricing model in most of our global engagements we run. We call it impact commercial models. This means commitment. This means price predictability. This means our customers are only paying us if the SLAs are met, the KPIs are met, or a specific transformation goal is achieved. So we surveyed 2,000 customers about the future of financial services. We asked them, what do you think, how will financial services in 2025 look like? And it's a 60-page, quite extensive study. Feel free to reach out to me directly if you'd like to have a copy of it. But I'd like to summarize the findings of the study in very simple 4 bullet points. So what is it that we've identified? Number one, there is a massive unused potential in financial services, and I'll come to the explanation in a second. Number two, there is a massive lack of customer excitement. Number three, we see the power of and that's the statement our CEO typically uses, and we see the era of and. So what does that mean? It's online and offline. It's digital and personal. It's omni-channel and hyper-personalized. And number four, we also see that the customer expects a 360-degree view based on the vast data that exists at financial services firms, but also companies are trying to ensure that they get a 360-degree view of the one and only customer. So let's have a deep dive into all of those 4 points. 60% of financial services customers do not actively receive any form of offer from their financial advisor. Imagine you have money at the bank and you're not getting a proactive reach out from your financial advisor today. 50% are generally interested and open-minded in receiving a proactive financial services offer, but nothing happens. So what does it tell us? From a corporate angle, this is a massive missed opportunity to drive top line and revenue. And from a customer angle, it's being perceived as an almost zero interest relationship. Lack of customer excitement. So I think the findings of the study around the topic of customer excitement is even worse. Look at the statements the customers have made. Pure communication, pure service, nothing special about my bank, too expensive, long processing and onboarding times, I don't have a contact person, I have no emotional attachment to my bank. Yeah. So the result is that customer centricity is not even perceived by most of the traditional banking customers, and the probability of recommending the own bank is only at 40%. So the average NPS score is also something that is not to be super proud of compared to, for example, the retail industry, or, for example, a car manufacturer like Mercedes, where the emotional attachment is much, much more than compared to the bank. Use of digital channels, and I again would like to use the power of and. So the study found out that when it comes to the use of digital channels, we are in the era of and. The trend towards increased digital interaction continues, and still the personal human contact remains as one of the most important factors for customers. So what is the ideal scenario? The ideal scenario for banks is they serve customers through online and offline channels seamlessly at several points in the process, with the option to switch in between. But they should also offer the option of an end-to-end online sales journey, and obviously a communication through state-of-the-art communication channels like chats and social media channels. Customers, on the other hand, they want an intuitive online customer journey, the so to say Amazon journey. They would like research, and they would like to do upfront research and pre-decide online if required, but continue the customer journey at the bank's premises. The study also found out that it's quite important for customers to gather information without pressure, and that price transparency through independent portals is very, very important and gaining traction. And finally, what also counts a lot is that faster credit approvals and a quick onboarding time without gaps in the onboarding process is very critical to financial services customers. 360-degree customer view. So 71% of consumers expect companies to deliver personalized interactions. And almost the same amount, a little bit more, 76% get frustrated when this doesn't happen. So today's consumers have been more demographically diverse, financially savvy, and they expect faster and more personalized services, forcing banks to rethink how they use data, how they use technology, and how they provide a differentiated customer experience. However, the reality on the ground, at least with traditional banks, is that they still use legacy technology architectures, different and competing content stores and data models, and differing levels of governance, authentication, and data access controls. So this results in an inconsistent customer experience due to siloed customer views across business lines, geographies, etc., etc., and obviously missed opportunities with delayed customer analytics. To be fair, we see a lot of focus on the data and analytics topic in the market, and we currently support multiple institutions to streamline the customer acquisition and onboarding process and make it more efficient, to build customer-centric digital experiences, to find new cross-sell and upsell opportunities with next best action or product suitability insights based on machine learning concepts. I just had a client meeting today where I discussed this case, that the moment a financial services contract is activated, how can I as an organization do some level of upselling of, for example, an insurance service? Yeah, but also the enablement of more personalized financial planning and portfolio constructions. At the end of the day, if you've just bought and financed a house, obviously you wouldn't want your bank to reach out to you again trying to sell a home loan. You want a differentiated offering. So how do we become hyper customer centric, and where do we invest? And this is obviously a topic for itself, which I can speak for hours and hours. But I think the most important topics are, number one, banks need to have a very, very clearly articulated vision and a board level alignment on the execution. The board has to walk the talk. Number two, prioritize your must-win battles. You can't do it all at once. Number three, focus on tracking and improving an engine, such, for example, an NPS system. Ensure you have a continuous learning process and improvement appetite while doing so. Number four, redefine your customer journeys. And this is a case, do not do many improvements, do a radical redesign. Your customers will love it and you'll see the effects in your P&L. Understand customer needs, build a seamless customer journey, and train and empower your employees to be an advocate for cultural change. Yeah. And finally, number five, leverage technology, operations, and innovation. Let me specifically touch upon the tech and ops part, as operational redesign and innovation is directly linked to a better and consistent customer experience. And this is what we do day in and day out at Genpact. We see that innovation and operations offer several advantages. Firstly, it provides the potential to grow revenues by providing new, better, and differentiated products and services for customers. Secondly, operations consumes large chunks of annual budgets, and the efficiency gains achieved through those digital technology reduces costs while you free up capacity and financial resources that can be reinvested in innovation and transformation. And tap into the power of automation and analytics to streamline your customer journeys. I'm a strong believer that analytics, machine learning is the future in that space, and banks can roll out seamless end-to-end digital journeys by automating workflows and removing the need for manual intervention, for example, during an onboarding or loan origination process. This will lead to a more positive customer experience. At the same time, deliver operational efficiencies. That means customer-facing teams will have to focus less on processing transactions and doing administrative tasks, and they can focus more on what really matters to your customer. To end on a positive note, financial services firms are getting much faster in driving change today, and we see massive improvements, a very positive appetite in the industry. And obviously, as Genpact, being a market leader in this space, we are proud to be part of those improvements. That's it from my side. Thank you.
Thank you very much indeed. Some fascinating bits and pieces in there. Really, really good. Questions, if I may. First of all, can you give me an example from your client portfolio where customer success is being measured well or maybe not so well?
Yeah. Indeed, I'm quite lucky with my customer base that the NPS scores is something they measure in a very, very rigorous manner. And to even go beyond that, we at Genpact, we are just crazy about NPS scores. So I, as the lead client partner for multiple accounts, have to enter the health check and the status of the relationship with my clients on a weekly basis into an app. Yeah. So there is massive focus from our customers as well as Genpact internally to track the health of the client satisfaction.
But for you, what's the industry trend that you're seeing when it comes to customer satisfaction in financial services now?
Yeah, I do see a trend that there is an effort to break through the silos. I do see a trend that that the whole thinking around customer experience is shifted to the board level, and it's being taken as an end-to-end global and cross-unit initiative. And what I also do is a lot of focus and technology investments on implementing new CRM platforms that provide 360-degree customer views. To give you a concrete example, I manage one major German auto finance institution, Auto Bank, and they're, for example, currently implementing a new state-of-the-art CRM tool, which will give the bank an end-to-end customer view. So it won't matter in future whether Ayca as a person has bought the car or the tire needs to be changed or there is an update in the finance or the leasing contract, it'll all be covered in one CRM tool, one single source of truth.
From your experience though, we're talking here about being hyper customer centric. Everyone would love to be hyper customer centric. It's the end goal. For you, what are the really, really common blockers that don't necessarily need to be there?
Yeah, I think if I had to put one main issue at the top of everything, it's not the technology, it's not the operations, it's not the lacking digital and automation tools. I think it's the mindset. I think it's the focus on change. I think it's the ability to cultivate change, to drive change, and to be bold enough as an organization to really want that change.
And is that from board level down, or is it the implementation that's the problem?
Typically what we see is that most of the boards I speak to are absolutely aligned to that, but we see many of the implementations failing or being delayed.
And as a final word on this, and I always like people to take away some very useful information from these events, if you were giving advice to any bank, FinTech who are watching this and are wanting to go on that journey to become even a little bit more customer-centric, hyper-customer-centric, what's the first steps that they should take to get onto that journey?
Yeah, create a vision. It starts with the vision. What do you want to be known for? Have an answer for the question, what do you want to be known for? And anything else will follow.
Start with a vision. I will add that again to my list of favourite quotes of today. That will be on a collection of mugs, which may or may not get released after this event. Thank you so much for your time. Lovely to see you again. Thank you ever so much. And thanks for joining us at FinTech Live New York.
Thank you so much. Thanks. Bye.
Thank you. Bye-bye.